and Pelerin is building Temenos 2.0. Thank you.
Okay, amazing. So, welcome to Fusion. Who has already come to Fusion before? Wow. Well, that's pleasant. Okay. So I'll make a really short introduction for those of you who don't know Fusion yet. So, my name is Olga. I'm venture analyst at Fusion, and what we do is that we're a global innovation platform. So we help entrepreneurs, corporates, and governments innovate. We do so by providing a structured framework which we call Learn by Venturing. As part of this, we also learn an acceleration program, an incubation program, and venture building programs. Since 2015, that's our motto, so supercharging innovators. And obviously it sounds a bit less sexy in French because on supercharge les innovateurs isn't that, woo! But so yeah, we're supercharging innovators. And since 2015, we have accelerated more than 50 companies in the fields of FinTech, PropTech, and LifeTech. So it can go from anything to digital health, blockchain, cryptocurrencies, anything that pops into your mind that is alienated with those three verticals has probably passed in the minds of the Fusion team. So tonight we have the pleasure of having the following lineup. Unfortunately, Ben Robinson had an emergency, so either he will be late or he might not come. So we might have a special guest from the public, which is a surprise. And the speakers will present themselves a bit later, and I will leave the floor to Thomas, who's the Director of Studies of the Institut für Finanzdienstleistungen of Zug. So it's from the University of Luzern. So it's the Institute of Finance for non-German speakers, a bit like me. And I leave the floor to Thomas. Thank you very much.
Thank you. Yeah, but to be honest, your German is much better than my French. But I have at school for 7 years French, but I have never done something with so much effort without any success. Sorry, so I will talk in English. And you will be thankful to me instead of speaking French, because it's really awful. Okay, so it's always hard to talk in the first nice week. Today we have a great weather, and so it's thank you very much that you are coming and listen what I have talked to FinTech. FinTech, we are publish every year since a year an annual FinTech study. This FinTech study is nothing else that we count all the FinTech companies all over Switzerland and analyze how they have developed. And I'm really impressed about the development of the FinTech ecosystem in the last 3 years. So this, our research in general, our study, and we are at the moment about 20 people which are working in the field by industrial partners. So we can only do what is relevant for the industry, for the banks and the other companies. And we have also different partners, and one of our most important partner is Fusions since 3 years, because we have always this Rüsti Graben. I'm coming from Zug, or now we don't say anymore Zug, we say Crypto Valley. I'm coming from the Crypto Valley. And so it's always important also to have a bridge in the French part of Switzerland. Our study is written by different people. We have some authors from the IFZ, which have different research topics. We have some specialists on investment, we have some on analytics, and so on. And always thank you very much to Hamburger, because they are writing the whole legal part. And I don't talk today about legal, but in the study and I think we can send you the study as a PDF, you will find all the legal aspects of FinTech, an overview, which is very helpful. Not for reading, but you can always use it if you like to know something. And we have also a part at our University of Applied Science of Information Technology, which write normally the technical part. So we make the vertical Fin, and we have a tech part. So what are the main topics, which I will tell to you in the next half hour? Yeah, Switzerland is really a global FinTech hub. We can say it all. Switzerland is a great place for FinTechs. Then the crypto valley is not a coincidence, or as our politicians now say, it's not the crypto valley anymore. We will go now to the crypto nation in the cryptocurrency blockchain space. And what we see in general, FinTech is growing and maturing. And sometimes I had a little bit the idea, I don't know how it is here in Geneva, but in Zug and Zurich, sometimes there are so many aperitifs, so many events, you can go every evening out, but sometimes you have to code, you have to build up a product, and you think to the customer, because the customer is finally deciding if FinTech is adapted or not. Oh, there we have a little problem with the slide, with the graphic. So this is the methodology of the study. Our study has two elements. We make a pest analysis for the surrounding of the FinTech companies with a political, an economic, a social, and a technical environment. And we analyze, and our database is built in this way, of the business model canvas. This is coming from Luzern, where we see the value proposition of the FinTech companies, their customer relationship channels, what customer segments they have, what are their key activities, key resources, and key partners. And we analyze also the revenue structure, not the cost structure. If you have a question or you don't agree with me, please raise the hands or hold it to me so we can discuss it. This is our global FinTech hub ranking. We have analyzed about 30 FinTech hubs all over the world. And we have done it for the second time. And last year, I was a little bit nervous because Singapore first, okay, everybody can agree with it. But if you say, okay, Zurich and Geneva is second, third, then I thought, okay, I became feedback from London or from Paris, and they say, okay, are you crazy? Nothing happened. The only feedback I become was why we have done it this way, and then they were satisfied. And we have become for several cities, why are we not included in the hub ranking? Our hub ranking is not developed by ourselves. It's based on 70 indicators from 22 studies. So it's like a meta-study where we have involved all the different other studies to see how to mix it together. We have these 4 dimensions, political, economic, and social. And you see Singapore is clearly the leader. Then you have a group of 10, I would say, which are quite in a similar area. And then you have the fast followers. Why is Zurich and Geneva so close? It's because most of the indicators are on country level, and only a few are on city level. So Switzerland, it has the same level at all. At first, we have also here Switzerland, but a lot of the other cities say, okay, you can't compare Switzerland with another city, so we have to distinguish. If we try to be better, we see that mainly in the technical area, we are worse not so good as Singapore. And if we compare it a little bit in the details, the different indicator of the technical dimension, we see this is Geneva, Singapore, and the red one is the difference. And we see this especially in the government online service, e-participation, high-tech imports, innovation level of the city, cybersecurity index. Switzerland is behind Singapore. Yeah?
I don't understand that graph. What's the, on the axis, and how did you define those numbers?
These are the indicators, the different, in the tech dimension. And yeah, this is a fair question. We have always made a ranking. So, if you see here, government online service, Singapore is 30, we have 30 countries. Then Singapore seems to be, I would say, 28. It's only 2 cities are better than Singapore.
Okay, so basically it's just ranking.
It's only an ordinary ranking, and it's not a difference if it's far away or better. We have all the indicators ranked. Otherwise, it would be very difficult to bring these 70 indicators together.
I would be a bit provocative. How
Yeah?
do you know that your ranking is objective and there is no part of subjectivity in basically comparing, let's say, give a 28 to Singapore and a low rating or lower rating to another country?
Yeah, we have
to
to.
understand. I mean.
Yeah, no, but you are completely right. We try to only use ranking which has some reputation. This is the first step. And the second, we make different sensitivity analysis to see if it's sensitive to changes in some aspects. And we have also an online ranking on Thomson Reuters website, where you can adjust the different importance of the different dimensions. So you can make a little bit your own sensitivity analysis. And this was exactly what I have said. Singapore, it's really top, but if you change a little bit, then in this 10, you see some changes. So do you have a little bit this follower group of the 10, where you have some sensitivities inside. So here, if we would like to be better, we have to implement online voting, such things, more governmental services, that it's easier to found a company electronically, such things. There is Switzerland not so good at the moment. So Switzerland is a good place. This we have said also last year, but is this, the fintech companies are really using it? Yeah, and we have the example of the Crypto Valley last year, and you see these are the numbers of fintech companies. This year we have 220 fintech companies, and you see the distribution. You have a clear cluster around Zurich, Zug, Schweiz. You see here our 6 different categories. We have analytics, artificial intelligence, banking infrastructure, distributed ledger, blockchain, crowd lending platforms, robo-advisor, and payments. And you see this cluster, but we have also a cluster here around Geneva, Luzern, with a lot of different fintech companies. Yeah?
Can I ask a question?
Yeah?
If you consider Zug as the crypto valley, as you say,
Yeah.
do you make a difference between the mailbox of the blockchain startups and the real team of blockchain?
Yes.
Because that's the big stuff.
Yeah.
In Ethereum, they are not developing in Zug.
Yeah.
But they're in Zug.
Yeah. So I agree with you. Last year I was quite optimistic, but I asked me, I'm coming from the banking, so I first asked me, okay, are these only incorporated companies, or are they also valuations and fundings? And the third step, are there jobs? So if we see, let me start before I came to the jobs, about the fundings. So if we have this good situation, the funding, this is not about a crypto valley, it's all over Switzerland again. You see the fundings in FinTechs, venture capitals, 2017 was around numbers, a little bit more as 20, 30. This year there are about more than 70 funding rounds. These are the public available. There are a lot of more, but we don't know, so we can only know the public. If we look at the volumes, you see the volumes are about 20, 30 millions last year. This year it was about 400. Also, if we take out the ICOs, and these are only the FinTech ICOs in Switzerland, then we have still about seed 24, Series A about 45, and Series B about 60 millions. So also in the traditional venture capital, we see a huge growth in the last year, all over the Switzerland. Yeah?
So did I understand correctly that you don't include all ICOs, but only the FinTech ICOs?
I'm only talk about FinTech. And FinTech is for us the definition, they are innovative solution for the financial industry. So we also include InsurTech. We have decided sometimes 3 years ago, and to compare the database, we keep it in the same. So I'm sure there are also much more grow in the FinTech companies, but now we have much more details. We have also RegTech, PropTech, such things, which are not anymore clearly FinTech. So we really like to be precise on the FinTech. But this is a definition question. If we include all the others, the numbers are more impressive. Yeah?
A question on the other slides where you see the, yes. If there is a venture that appears, let's say, more than one of the vertical, let's say analytics and investment management, do you consider like 2 data points, or is it only
No,
one?
it's only one. We decide at the end, it's this data point, and sometimes next year we're changing it because he have shifted perhaps the business model. Yeah.
The follow-up question, did you look at how, because anyway they are kind of verticals that eventually can be combined along the value chain to build a product. Did you look at potential interactions between those companies, how they could work together, and is it a new data point or not?
Not really on the, we compare and try to find out how the FinTechs work together, because we ask what are your key partners to build up a little bit the value chains. But we don't see at the moment that FinTechs strongly work together to build up a whole value chain. Normally they work with one partner, a bank, to build up the value chain.
Just a quick one. In the FinTech definition in your study is what they actually are the FinTechs still alive, or this is the new FinTechs that...
They are all alive, and we also noticed...
From the study of, okay, you have a FinTech 5 years old in the study as well, and that's part of...
We have also companies which are 20 years old.
Okay.
We also include incumbents, not only startups. Because we are interested at the innovation and not at the age. Perhaps it depends on my age. Okay, these are the funding. We have also, all the people are very bullish on the ICOs, and we have analyzed how the ICOs has 2017 developed. It looks great in dollar. If you look at it in Bitcoin, the market valuation looks a little bit different. So perhaps it's only driven by Bitcoin, and, but it would be interesting to follow if it's only the beta which is lower, or is it really a significant value. So this is a chart which I'm really looking forward to publish it next year. But coming to your question about jobs, we see also this year now that after the evaluations and the fundings, we see also the different, it calls Crypto Valley Labs. It's like Fusion here, only for blockchain companies, offering incubator, accelerator, and co-working spaces, so that we also see more jobs in Switzerland. Generally, we can say that on this startup jobs platform, Investire, only for fintechs, there are 250 open jobs end of the year. So there are also generated jobs in the fintech area. And also on the Crypto Valley page, there are some jobs offering. But I think here is Geneva, especially with Fusion, leading. You have this offer since many years. Yes, these are the 6 categories of fintech companies. If we look at the numbers, we see the distribution of the fintech companies. We have some more in robo-advisor. We have some in analytics. The numbers are a little bit, but it's a pity. Can we change perhaps on PDF? Or is this a PDF? Okay. Yeah. So if you have to see if you distribute the slides, that they are a very good graphic. So what we see here, I can tell you this. This number are the deposit lending stuff and banking infrastructure, analytics. They are more or less stable. This number is payment, and payment was shrinking. There are this year less payment companies in the fintech area than last year. The growing areas are in investment management with plus 13, and of course distributed ledger, which was also growing significantly. But generally, we can say that we have over all different categories, we have very good distribution.
Sorry, I have a question.
Yeah?
If you look at how the trend is evolving, let's say that I look at analytics.
Mm-hmm.
Analytics can be applied to many different things. Can be robot advisors, can be data science, or whatever, quant, whatever things you want to do. Did you look at specifically how analytics is used?
Yes.
Okay. So
Yeah,
do you see an evolution?
but you are completely right. Our categories, and perhaps next year we have another slide for the categories, because we are mixing the verticals with payment, investment, deposit, lending, and we are mixing with the technology. And next year we try perhaps to make a matrix, or we have the technical horizontals and the verticals mixed. So we can solve this problem. At the moment, we say, okay, is it more on the analytics side or more on the investment side? And analytics, you have a lot of companies which are not really focused on fintechs, like Palantir as a big one, which also an analytics company, but not really in fintech. This is the vintage over the year, and you see last year we have a little bit less new companies. This year let's grow again, and you see most of the companies are in the distributed ledger area. This slide is very important in my opinion, because it's the companies that grow of the funding, and you see that last year you have most of the companies have a funding between 1 and half a million. And this has shifted now to this bucket. Last year we have less than 25, now we have about 30, and here less than 40%. So we see a shift from this bucket to this bucket, so the companies are better funded than in the past year. In the jobs, we see exactly the same. Last year, we see a lot of companies with less than 5. The similar size, 5 to 15, and now most of the fintech companies are clearly 5 to 15 employees. The revenue model is always the question, are the fintech attacking the banks? No, because the banking revenue models like interest, commission and trading, interest and trading are no revenue models for the fintech, and the commission is decreasing. So the fintech companies are more attacking the software companies with license fee and software as a service models. What I'm personally always been surprised that we don't see not more fintech companies in these new revenue models like advertising and data. It's also a good question. License will be the traditional software model where you have a high upfront, and here you pay as use. But it's always, it's not black and white. Yeah.
I think in Switzerland, especially banks get the revenues from commissions a lot as well. I mean, there was an article recently published, I think, in Reuters that blockchain and blockchain-based solutions are putting Swiss banks in danger the most because private banking relies on commissions more than, for example, investment banking would be.
Yeah.
So
yeah,
in this case, I think definitely it's danger for banks if you look at commission being so high.
It's true for the private banks, but you have also the retail and investment banks. And the retail and investment banks, it depends on the business line, but the retail banks earn their money from the interest differential. So for the private banks, I agree with you. So there I see the commission business of banks is more under pressure, but still it's decreasing in the percentage.
Did you overlap that slide with the set of revenue models by revenue? So
Sorry?
looking at basically revenue coming from interest, revenues coming from commissions and so forth.
Yeah.
To look at basically the ratio between what a company on average may generate in terms of sales compared to the number of companies you have.
No, because the problem is it's hard enough. We have only the numbers, not the amounts.
Right.
So if we ask the amounts, we become in reality no answers because it's private. So, but they say, okay, we can tick the box.
Yeah, because you may have basically a small number of companies doing trading,
Yeah.
but generating a huge impact on
Yeah.
the economy,
Yeah.
and basically becoming a hub
Yeah.
because it's a special thing.
Yeah, I agree with you. No, at the moment it's only the numbers.
Thank you.
So, but let's forget the customers. If we see most of the fintech companies in Switzerland are international and mostly in the B2B area. So this the reason is Switzerland has a very small home market with our 8 million people. We have then asked the fintech companies, so far we have analyzed them, we have asked them, what are your problems? And compare this to traditional Swiss small and medium enterprise companies. And we see here that finding customers 10, then it's a high problem, it's a big problem, high pressure. If we have 0, then it's no problem. So if we look at that, we see that finding clients is for Swiss FinTech the biggest problem. Access to finance is on average not the big problem for the Swiss FinTech companies. Cost of production, it's average. Availability of skilled staff, it's a higher problem. Regulation, it's depending. And expansion to international market is also an average. The Swiss small and medium enterprises, we don't ask this. So they don't have the problem, we don't ask them. And what we see, if we have now all these different categories, we see that they are distributed. Competition is for all an average problem. finding customer is for all a high problem, a severe problem. Access to finance, for most, a lower. Cost of production, average. Availability of staff is different thing. And regulation, it's on average not the problem, but it depends very strongly on the category. So it's, for analytics, really no problem, and for distributed ledger blockchain, it's a bigger problem. Expansion to international markets is for all average. So, to come to the end, to summarize, Switzerland is really a global fintech place, especially at the moment in the field of distributed ledger. We are coming from hype to reality. The Swiss fintech sector is growing and maturing, and the majority of the Swiss fintech companies have an international orientation and more technology-driven business models. And finding clients seems to be the biggest challenge for the fintech companies in Switzerland. Thank you very much.
I've got a quick question.
Yeah, of course.
If finding customers is the biggest problem, would you say that's because fintech companies are producing products or services that the market doesn't want?
No, I don't think so. Perhaps also it's. I sometimes, how should I say it? Often is quoted that banks don't work with fintechs. And I often see also a little bit the opposite, that fintechs also work in their own space, are trying to develop their products, perhaps also for an interesting small group, but not for the majority of the clients. And they work, perhaps should they talk also more and proactively with the established banks to find out more what are the business today. Because I think this is a starting point. It's not always the disruption. This is the first point. Then I think the second point is, for a lot of business models, we don't have a need in Switzerland, because we have quite a very good financial infrastructure, though it's really hard to improve this existing infrastructure with new products. And this is the reason why perhaps international, very attractive models, where in other countries perhaps the infrastructure is not so good, people need new solutions. And in Switzerland, it's hard to develop this new solution. And then I think sometimes, they are not really focused enough to the client needs. Or, yeah.
Yes, a follow-up question on the last question actually of this gentleman. Did you look at the impact on legal matters for a Swiss company not being able to deploy its services in, let's say, EU or other sides, globally? What's the impact of the legal framework on how agnostic is a solution when you try to deploy that to other markets?
I think this is quite different on the category you are talking. I think it's DLT, the blockchain solutions are per definition global setups. For robo-advisor, it's a little bit the same topics as for the banking industry in general, if you like to distribute outside of Switzerland. For analytics are completely different regulations. So I think the regulation topic is really quite different for the different categories. So, but there I think the Swiss companies are very active. Most of them are serving international clients. So yeah, it seems that it works, and if we ask them, regulation is not at the top priority. It depends on the category, but on average this seems to work.
And actually, to go back to the new solutions that you were referring to, I would suggest that we move to the panel of discussions. So if you could already take a seat. And I am inviting on stage Monsieur Arnaud Salomon, who is the CEO of Pelerin, and they are building the bank of the future. So he will tell you a bit more about it himself in a couple of seconds. And also, I have the pleasure of inviting a special guest, who is Stan over there. So Stan is the CEO of Fizi. They're building a personalized stock investing assistant, and he will also tell you more about it himself. So a big round of applause for our panelists. Thank you.
So obviously I'm not Ben, I'm Stan. In terms of the fintech scope, we can consider ourselves more really early stage startups, fintech startups, working on a solution for what we call the do-it-yourself people. So the people, they do the stuff on their own. And we're building basically not a robo-advisor, but a robo-assistant.
Hi, I'm Arnaud Salomon. I'm the CEO of Smex. Smex is a tech company that builds products for banks. And some of those products, we decided that we want to also run them. So right now, we are in the process of launching quite a very interesting project, which is called Pelerin. You're right, it's the bank of the future. We took the completely paradigm shift angle as to what is bank, what's the service they provide, and how they should provide it. And we are basing basically this bank on 4 pillars, which is full reserve, marketplace, tokenized, and open IT architecture. I'm not going to give you the full pitch now because it would be a bit too long, but if you're interested, don't hesitate to come and speak later.
So maybe we can take some questions from the public, and if you don't have any, I have one. So as we have seen in the recent months, many developments and quite a shift in paradigm in terms of how the banks are now wishing to collaborate more with the fintechs and not actually seeing them as competition. So how do you see this? Is it a real fact that you observe in your day-to-day businesses, or is it, do you still see some competition between banks and fintechs?
Okay, quite tough question. If we look back on the history, let's say 3 to 4 years ago, I would say fintech was saying, let's fuck the banks. Okay. So the paradigm is changing a bit, and I guess you're going to add some stuff on that, because it's not my properly value proposition to compete with banks, and more to adapt the new business model of investment. But yes, today, if we're looking to the B2B model, banks are more involved to discuss. Then I have no experience if they transfer from discussion to commitments.
On our side, the very first product we developed and operated ourselves was international money transfer that involves currency exchange. And of course, here you're directly targeting the bank's margin. So originally, at the very early beginning, 2 years ago, I would say banks were extremely cautious. They never said no, because of course a no would mean that you would go to competition. So they always say yes, and then you would have to wait 3 weeks for each and every email to be exchanged, and then to have a meeting it would need like 2 to 3 months, and basically they were playing the clock. That was pretty much 2 years ago. Today we see a completely change in attitude, and we see them like very proactive. Most of them, they want to have a story of innovation to tell. Sometimes it's just a story, sometimes they really want to do something, but at the same time it helps them to have fintech closer to them, right? So they even invite fintechs to basically share office with them, etc., etc. And I think this is the interesting tipping point right now where basically fintech is not fucking banks anymore, but it's more like playing with them as to showing them there is new potential revenue stream. Maybe, for example, in our case, maybe we shouldn't make money on currency exchange. Yeah? Maybe that was a bit exaggerated in the past. Maybe we can shift to pretty much use this thing as a loss leader, as a product to attract customers. You know exactly what type of customers are consuming those products. In Geneva, we're surrounded with cross-border workers, and basically they consume a lot of currency exchange. So if you want to target them and sell them some very high-value product where you can actually make money, you first need to attract them with basic ones. And this is what we try to reach now with banks.
Yeah, I have said my opinion that it's not, that it's change. I can agree. I'm a little bit surprised from your opinion that you will like to build a new bank, but in fact, you build a new bank, and if you have a new bank, you don't need anymore the old bank.
Yeah, actually, we are building a new bank, and we started with IT, right? So on our side, we put IT on top of everything. So the goal today is that we have built this amazing core banking system where we bring the entire bank's balance sheet on chain, where we will be able to tokenize each and every liability and asset of the bank. And this is quite interesting for them also, you know, and our ambition is to basically deploy that kind of solution in other banks. And today we aim at running it ourselves to show it as a proof of concept. But we have a very stubborn way of looking at it, right? We're a bit libertarian in our heart and feel. So the way we want to conduct this, run this bank, is by actually sharing those values. Now, if someone doesn't agree with those values but is still willing to profit from that kind of tech, then he would be able to use it from another bank. And again, today you have plenty of restaurants, right? So you need to have the choice. You need to. There's not that much competition in banking today. So
I just want to add something actually. If we're looking at today why banks and let's say incumbents can be interested in fintechs, especially, it's, in my opinion, it's for two reasons. The first one is the cost of acquisition. That's the new players can get new customer with a really, let's say, a little cost of acquisition. And it's especially super true in the digital world. The second point is the loyalty the fintech can build between their customer and their solution. And at this point, many banks, they go through the history and they did some stuff. And people think it's bad. So they want to change maybe the players. But with this, let's say, bias, the bank can keep their clients and rebuild a kind of loyalty.
There's just one thing also that needs to be added here. So Switzerland is a bit of an island in Europe, we know that, and in Europe there is something that everybody probably has heard about. It's called PSD2, which is also a game changer for the Euro, for the EU industry. If you look at it, what is their threat today is that this PSD2 stipulates that each and every customer in the EU can choose to give access to his banking details, information, whatever, even give instructions and action to fintechs. Yeah? If the clients want it, the bank cannot refuse. And therefore, fintechs can become the interface with the client. And what's the risk for the bank? To become just the authorized pipe, the one that has the license to actually be connected to the international financial world, to be able to process transactions, to be able to take deposit and remunerate those deposits and provide loans. Today, that's the way it works. And the problem is that banks today, they really fear that they would lose the customer facing and that fintechs would be this interface.
I have sometimes a little bit opposite opinion because there are also, I agree completely with you that in Switzerland we have not PSD2. The reasons are different, but if we look also at the banks which are offering API interfaces, they are not really used by a lot of the fintechs. Very often we see the startups build up their own system also in other levels. And I don't understood sometimes why they don't work closer with the established player, also to avoid some regulatory influences, especially in the investment management. I think because there is no need to build up the whole ledger for only offer attractive investment solutions.
Okay, so you're talking about the IPI in Switzerland especially. I got an example. It was last week. There is a startup in Sweden called Tink. They built an infrastructure of IPI for every single bank in Scandis. And it's going to be used, and it is used by a lot of fintech. The pain point this startup team tried to solve at this point was what could be the data we can really we can leverage to build super nice and super useful application for end user. The main problem, from my point of view, is like when let's say the infrastructure of the IPI is coming from the bank, it's maybe the way they want just to add some value and keep the control of the data, which is the goal of tomorrow.
Yeah, I mean, PSD2 is very interesting to share the data, but now we have the GDPR, right? That's going to be in coming months. And we have the Facebook scandal. So I think for the normal people now, will be more reticent to say, okay, share my data. Well, what the hell? I was already doing it in Facebook. So I'm not going to do it with another fintech. And probably that's the paradigm is changing, even though I think PSD2 is very interesting. I don't know what would be your opinion about what's changing this very, very fast with the Facebook scandal.
For me, well, this Facebook scandal, I don't know. I will give you just my personal opinion. What I see from it is that it's a scandal mainly in the news, but if I look at my friends, they still continue using it the same way. I don't see any change specific of behavior around me. And true, and that's also, I think, a good thing that it happened, because it will force players to come with actually a real privacy policy story to tell to clients, not just something on the bottom and the footer of the website where never anyone has clicked and read it. And probably it will maybe change a bit the way the business is conducted today. And I think it should be positive in overall.
I agree with the point. I think it's very important to see what happened really on the numbers and not on the media releases. So I would also expect, but it's always difficult to make predictions, that we don't see a big influence in the users of the different services.
Basically, there is two questions in your question. So the first one is GDPR. What's going to be the impact for the fintechs? Let's say more B2C fintech, because we store the value, we store the data. Actually, if we look at specifically the text, you have three implementation to do. You have what we call the double opt-in, which is instead of just automatic clicking, you say, I agree, I specifically agree that you can store my data, and I want you to do that. The second point is you can delete, you can ask the fintech, the services, to delete every personal information whenever you want. And the last point is to explain how the data, your data, are using in the system. So it's my personal point of view again, as we want to be really transparent and to say, okay, we're doing this stuff in this way, this way, this way, super transparent. If you don't agree and you don't want that we use your data to build this super cool stuff, don't come, basically. But it doesn't change anything, because the value proposition, if it's, let's say, if it's specific and if it's transparent and intelligible, there is no issue in that. The second point, which is about the Cambridge scandal, the name, that's more a philosophical question, because if we look at the Facebook or on the big platform of social media, there is something which is coming every time, is which value do we store in these applications? And basically, we're storing our history. We're storing our life with our friends, with families, emotion, everything. Are we ready to lose that? That's just a question.
My question is for Arnaud. That you said that you are building a bank, a new type of bank or so. I'm sure you must have heard of Revolut. I'm using it. It's great. It works for vacation, etc. Perfect. But I wouldn't put my money if all my money there. So how do you gain trust of people? I would rather trust UBS or Credit Suisse than Revolut.
Yeah, that's an excellent question, actually. So on our side, as I said, in the story we want to convey to our clients, we are a very deeply libertarian bank, meaning that the first aspect of it is full reserve. And that's very important, because what we say is that the balance sheet of the bank we are going to run is going to behave like a custodian bank. It's going to behave like someone that you can give your money to, and you are sure that he will never use your money to loan it out to someone else. He will never use to gamble on the market, or he will not even leverage the size of its balance sheet through a loan from another institution. Keeping full reserve means zero risk for you. I mean, banks has risk, but not risk of market, not risk of counterparty because the money has been loaned out to someone that is defaulting on his loan whatsoever. So on our side, this is how we want to gain trust with customers. We want to convey the message that we are the safest bank on the planet. And when you tell me, I would rather trust UBS, I would tell you it's not because they're 200 years old that they're more trustful than a newer bank, because simply if you look at the ratios of those banks, yes, they are too big to fail and the government is always behind them whatsoever, but if you look at it today, things have changed since 2007, 2008. And most probably, UBS would not be the safest bank to have your money at today, in Switzerland at least.
Totally agree, but you have to win over the trust of people that you are that strong, or stronger actually.
Can I ask you a question, actually? It's the main question of every fintech or company who need to get the trust of people. It's on the paper and by law, what you are building is just perfect, but it's super complex in the same time. I mean, to explain to the people in the street that you know the loan are in segregated accounts and this kind of super high level, let's say high level concept of banking. How do you transmit this complexity in super simple stuff?
And I think for us, the strategy is quite clear. We are targeting one specific market today that we believe is going to grow massively. And by becoming this historical bank for the blockchain community and also for the libertarians of the world, because there are many, somehow you tend to have a network of ambassadors. People that are the ones actually going and look after their family, their friends, and explaining the situation, what's the problem, and actually how we are solving it. And I believe it's not, our role is to convince those ambassadors, and I believe they're already convinced. And I guess our role is really to give the incentive to people to share the words one step further.
You say that there is no risk, but how you want to earn money if you have, because it's impossible.
It is actually possible. So if you look at it today, private banks, they don't do loan on balance sheet or very little. They don't really play with the balance sheet itself. So they are mostly commission-based. They are not credit-based. And that's actually the very important point. And on our side, this is basically the second aspect of our bank. We are marketplace. We are a marketplace bank. It means that on our side, we provide all the traditional banking services that you might find at your bank. But instead of doing it ourselves, we just aggregate the flows of all other institutions and propose you always the better deal that you can find. It's always like this. A marketplace is always a sum of actors who are some of our liquidity providers and some are takers. And basically, today, if you want to have a loan, you will have to knock the door of every bank and compare the offer, which are usually not extremely clear to compare with. And the idea with us is that if you want a loan, you don't care who is providing it. It could be UBS, it can be even Lending Club. You just put your details, your criteria, and whatever comes on top is the best deal. Now, again, it's an open marketplace. So if you're still unhappy, Well, you can create your own deal and propose it to the crowd to subscribe into it. And that comes into pretty much lending club or crowd lending platforms. And that's exactly what we're building, platforms where basically it's open. We are actually connecting liquidity providers. We have bots that basically is able to provide you information from others or even liquidity when it comes to currency exchange, etc. But at the same time, it's always free for anyone to propose better than we are proposing and get matched by someone else. So we are commission-based.
Do you think that the big tech giant in terms of Amazon, Google, so on, could be interested in your market sometime? Because I read about Amazon that it's just become another insurance company, and very interested regarding fintechs. What do you think about this kind of topics?
Actually, for me, I don't understand why they are still not there. I don't understand. To be honest, PayPal, for example, has a banking license for years in Luxembourg. They've never changed the business model. I don't understand, to be honest. I fully don't understand why Google today is not a global bank in the US, at least, right? Of course, there are regulations, and it's not easy to serve the entire world like this, and there's cross-border issues, but still, I mean, in their home business, in their home country, they should be running this business.
There's a simple answer. The return on equity in banking is much lower than the actual return on equity of Google. So they are not interested to go in this business. I think in the Chinese is a little bit different business model, because what they are do really great, Alibaba, they have this seamless integration of financial services. Nobody like to pay. I like to buy something and I have to pay. So they integrate paying, lending in their buying process. And I think this is one way we will see also this seamless integration of financial services, because then it solves the client problem.
Thank you. What's the expected growth within next 5 years? This question goes to you, Arnaud.
Oh, sorry. Can you repeat your question? The expected growth?
Growth, the industry growth for next 5 years.
You mean the blockchain industry?
Yes.
Well, I have no crystal ball. Well, I mean, for me, I can only speak personally. I'm a Bitcoin maximalist since pretty much 2012. I'm into blockchain since 2012. When I discovered it, it changed completely my mind. I quitted my job and I just decided that I should do something. So for me, it's going to be, there is also another problem. So today, blockchain has become also super trendy. Probably it has spiked a bit too quick. And for some actors, it's a solution for all their problems, which is not true. And blockchain is solving only one single thing very well. It's generating trust in an environment where you don't need a third party that would enforce this trust otherwise. And today you hear some proof of concept done by Swift, for example. Yeah, they want to use blockchain today. And well, for me personally, again, that makes me laugh a lot, because why would they use today a kind of expensive tool to maintain, not very efficient database in terms of speed? Why would they use that? Because this tool is made to disintermediate. And Swift is exactly this. They are the message operators of all the banks worldwide. They are the trusted central party. So basically, by using blockchain, what they want to achieve, they want to make themselves irrelevant? No, of course not. They will make a private blockchain. And then why would just a simple server with an API standard that everybody would plug into wouldn't work better? Yes, it would work a lot better. It would be cheaper to maintain, and it would be way more scalable. But again, today blockchain is a buzzword, so everyone wants to have their proof of concept about blockchain, and some of them, to my opinion today, have no future.
Just then add to one thing. If I have say $1,000. Where would I invest in terms of if I you know what I mean? Basically, if you want to see 5 years return of investment, where would you put your $1,000? Which basket you put it?
So you're looking at the speculative aspect, right?
Yes. In your view, because in IC you have the broad, you are seeing it in a much broader level than some of the top thinkers. You know, in that sense, what's your opinion?
I mean, I'm going to answer very quickly to this. So let me tell you my story, for example. When Ether arrived, the very first time we heard about Ethereum, then there was the ICO coming very fast. And then I looked at it and I was like, okay, so they are going to do it in Switzerland, pretty much interesting. And I look at it, it's pretty much of like old way bankers behind it. So there were even like Goldman Sachs at the time that were into this thing. And then somehow they were pre-mining the entire blockchain, 30%, and then they would sell it as an ICO. At that time, it was kind of unusual. You know, you would create a new blockchain. You would, from day one, from the Genesis block, everybody would be able to mine it and profit from it, right? It was an open thing. And they came with this pre-mine stuff. We're going to sell it through an ICO, make money on it, and then deploy a foundation, and then be super centralized in this thing. So for me, the first time I saw Ethereum, I was like, oh my God, this looks like super scammy. And somehow the ICO came, I was interested, and I missed the first days of the ICO. And then very quickly, the price doubled, because they have this mechanism in ICO where if you miss the first one, then the price increased by 20%, and then 20% again. And then at the end of the ICO, it's 2 times more expensive than it was at the beginning. So you feel like, why should I buy it 2 times more expensive now than the guy who has bought it 2 weeks ago? And somehow I missed it, and I didn't invest it, being super sure that it was a scam. And you see today, it's not at all a scam. It's working very well for them. So I'm very bad at giving advices for speculation.
2 questions. As it will be a Swiss bank, will you report to the SNB? And also the Swiss National Bank? And also, second question, what about the negative interest for a crypto bank?
Excellent question. Yes, so our goal is, of course, to be regulated by FINMA, to obtain our banking license from FINMA. Today, we started this process for the regulation process almost a year ago. We work with one of the big 4 company called EY, Ernst & Young. We're quite advanced in there, but we're not there yet. There are mainly few reasons behind that. First of all, FINMA is afraid of the Pandora effect, right? So they give it to one. What would happen is that probably hundreds behind would come and ask the same setup. Second thing, they are afraid of profitability. This is probably one point that we could check very easily, right? And then, of course, they want to know that the people running a bank are not just like tech dreamers that have made an internship of 2 weeks within banks and says, oh, I know it's not working well, I know I need to disrupt it. But they want to see also old school bankers, professionals, because if you happen to be to have the story of being the bridge between the old and the new world, you need to have in your team the old type of bankers that understand, of course, the new world, but also understand perfectly the way it works, the way regulation works, and how you actually read the balance sheet, how you have strategies, as you said, to avoid to pay negative interest rates on the deposit of clients, etc., etc. And of course, there are several strategies. If you look at it as a full reserve bank, there is a condition with the SNB that's 20 times of the minimum reserve that the bank should have is exonerated from the negative interest rate. So on our side, because of the full reserve nature of our balance sheet, it means that half of it is already out, right? So only on the other half we would have to pay it. And that would mean that we would put 100% of the client's deposit into SNB, which we won't do. To be a full reserve bank, what you need to have is a deposit is a liability, right? So on the other side, on the asset side, you deposit at the SNB, this is an asset, but you can also buy some kind of what we call HQLA bonds. HQLA means high quality liquid asset. It means that you can liquidate it within a day without losing value. And that's very important because as a full reserve bank, the promise is if 100% of the clients wants their money at the same time, we should be able to deliver it within 1 day. And that's actually the strategy we're putting in place. Now, if you look at the biggest question is, what about other currencies? Because when you're a Swiss bank, you have access only to SNB. You don't have access to ECB. You don't have access to the Fed. You have access to corresponding banks. And therefore, you have the risk of those banks going bankrupt with the fund of your customers because they are the corresponding banks. So there also, you should find solutions for that, especially as a libertarian bank. You want to build a solution where you keep the Swiss franc with you in Switzerland at the SNB, and you have a total swap agreement with those banks so that in case they go bankrupt, only the agreement fails, but not the deposit. The deposit is still safe in the safest country of the in this planet.
Does anybody else have any questions? No? Yeah?
Do you expect the biggest players in Switzerland in the financial industry, such as UBS and Credit Suisse, to do like a series of acquisitions in fintech, or do you think they would maybe grow? Come up with fintech solutions in-house instead?
My personal feeling is they will buy it, and they've been trying hard to build innovation from inside. They've been trying it for a long time right now. And maybe you will disagree with me, but if you look at it today, what is the biggest IT employer in Switzerland? It's UBS. What is the biggest IT employer in the world? JP Morgan. Yet they are not the innovators such as Google, Facebook, etc., which have less IT guys than they do. Why? Because today they are stuck with all core banking systems that they have to maintain, patch, and especially UBS because they bought so many banks. It's all interconnected with bridges and patches and things and that, and they need IT guys everywhere to maintain it, and if it fails, they need to have one guy that push the button to really remake it work. Now, you would say, but why do they rebuild this whole thing from scratch and start all over again? Because it's quite difficult actually to change things that is actually working. And moving from a model that is working to something that is unknown is first of all costly. Some people compare it to, it's not impossible, but it's like changing your wheel while you are driving at 120 on the highway. It's not impossible. You can find some kind of physical and engineering way to do it, but it's not as convenient as being stopped on the side. And my opinion today is that banks will do a series of acquisitions. Why? Simply because they have access to extremely cheap capital, so for them it makes sense. Simply because they gain a lot of time, they get knowledge, they can lock also the founders within this company saying, okay, you have to stay at least 2 more years and do the full transfer of technology, etc.
Maybe just to add something, yeah, you talk about basically the tech legacy of the banks. Yeah, just one example for you, maybe. The BNP Paribas core banking system is based on Fortran, which is a language of the 60s, 70s, and they can't change it. They can't. Because they don't have really the keys to change it. If they open it, it's like the Pandora box for them. They just lose everything, and they don't want to take the risk, actually. So in terms of like the acquisition, or what you can say, okay, disruption and incremental innovation. The bank, like for 10 years now, trying to do this incremental innovation. But maybe there is something missing in this ecosystem, is like maybe the culture. Because you can't create the new world with the, let's say, old mindsets. You need to have and to bring and to build a new mindset to really understand what is the value you're proposing to the client and on which services you want to leverage and you want to scale. And basically, yes, in the future, if we are looking at the US as an example, the main robo-advisor for my space, for example, has been taken by big banks on the spot or just behind.
Yeah, I think you see that a lot of banks are just buying different fintech companies. Your different exits are made by banks. I think we should distinguish between innovation and legacy questions. I think fintech, in my opinion, wouldn't solve the bank's legacy problems they would be for the new innovative solutions. The legacy, this is other problems.
Arnaud, I have a question. Pelerin or banking bank of the future, can it be disruptive toward banking software vendors like Temenos? Or
that's exactly what we believe, yes. So today we are building this core banking system. It all started with tech on our side. The way we build our architecture, we call it, maybe for marketing purpose, future-proof. The simple reason is that the way we design it is we have microservices communicating between each other through a bus of communication. That means that we have like hundreds of those microservices. That means that once you want to scale, it's scalable at infinite. And when you have something that needs to be run in one technology, something needs, for example, the order book would need to be run in Scala, and this one would be require Java. This one needs more data persistency because it's all about the account, so you don't need that much speed, but more on this. You can choose each and every technology on those microservices. They all communicate via a bus of communication that is also open to the external world, because this is for us, I think the biggest challenge for banks today is to allow any developers of this world to come and build services on top of their compliance platform. And banks should be the compliance layer. They should make sure that compliance is enforced, that AML is enforced, anti-money laundering, that they make sure that all clients are clearly identified and everything operates within a framework of set of rules. And that's today basically the principle of what we build. We build a rule engine that makes sure that nothing can be processed outside of those rules, and therefore we can open it to anyone to come and build FinTech services on top without having to deal with the fin part of FinTech. Because this is the annoying part for those tech. If you look at that, they go so much into blockchain, etc., because they believe it's just a plug-and-play thing. I don't have to talk to bankers, I don't have to talk to regulators, I can stay in my room and drink coffee and program. And that's actually, I believe, where we do good tech, but we believe there are way better techs in this world that would be willing to actually help us build this thing, and they would profit because basically they would be creating something they own.
Can I ask something, or somebody else?
Do you want to go?
And what do you think about Ripple? I mean, about the value proposition of Ripple, and I don't mean necessarily. I mean, I don't need the price, of course.
Sell.
And I don't mean the XRP, the token, but I mean the company. You know what they're proposing to do.
No, I mean, I know, of course, Ripple very well. First of all, it's not a crypto. Secondly, it's a very highly centralized platform. They profited a lot from the hype because they managed to basically brand themselves as the blockchain for banks. And you hear, again, stupid stuff, like, I won't name them because we work with them, but a big French bank here in Geneva is making a proof of concept of international transfer with France on the other way through Ripple. Basically between a bank they own to a bank they own. Yeah? For me, this is completely bullshit. If you look at the structure of Ripple, if you look at it, 90% of the remaining Ripples are in their hands. What's the point of having this crypto? Because in the end, banks don't care about that complexity of having a crypto on top to pay the gas to process transactions on top. For me, I think it's useless. I mean, today, if you really want to disrupt this industry, if you not disrupt, that's not the correct word, but if you really want to build added value, you should have something open, fully open.
I would like to know if you guys think that banks will acquire fintech to grow them or to kill them. Basically, often, and in the past we've seen different industries, potentially disrupting theirs, buying and then letting them die, basically, like write off. What's your opinion?
We see that very often, of course. I believe even us, we've received proposition last year. And I believe it was mainly for this thing not to happen. But this I cannot comment. I think it's a very case-by-case basis. There are things that are actually bringing value for the bank, and they want to actually use it, expand it, and use that as a way for them to generate more revenue. Because again, it's all about finding new ways to make money. Banks has to change in the way they think how to make money and make money on added value, not making money on very basic stuff. And I think that's really at least the way things are going forward today, I believe.
I think they buy it for Go. Unfortunately, in the integration process, often they kill them. But the purpose is to go.
Actually, there is one point. If we look at the timing of implementation of innovation in banks, it's super long journey for them. So basically, if they can't afford to get this resource, the assets for this timing to build a stuff, they would acquire the fintech to leverage on their technology, but then they kill everything.
Yes, from the study. I would like to know a little bit more, or if you can, Thomas, develop a little bit more regarding the strengths of Switzerland and where you see the potential to go global in terms of technology. What you see it could be the next step for Switzerland?
Yeah, I think it's as the fintechs are doing it, they're doing it very well at the end. They try to go globally in the B2B area because we have really a great tech pool. We have great entrepreneurs in Switzerland. And if I see how we are growing the last 3-4 years, I think I'm very optimistic for the Swiss FinTech area that we are growing, especially in the B2B area, with different new products as software for banks or new analytics tools or blockchain solutions or whatever.
If you have to bet from your categories, which will be your blue chip? Distribution ledgers, analytics?
I have a bet, but my performance of my past bets is so bad that I keep it for me now.
Probably the rest of the panel as well can comment in the field as you are building your businesses, where you see the...
Where do we see the future blue chips coming?
Switzerland, let's say, okay. We know that if you are doing your business because of great potential, but as Switzerland as a country, as a whole, overall, where you see it? Because you have, I guess, in your ecosystem you are in, you are sharing with other people as well and say, okay, that might be interesting. It's not interesting for me, but that might be interesting as well, like analytics.
But I think in general, Switzerland is extremely good at building high-quality products that are focusing on B2B. This, I believe, is can be a unicorn thing, right? So on the consumer side, the problem with fintech is that it's so much regulated if you compare it to any other thing. If you sell watches, you have absolutely zero constraint to sell in China. Well, that's zero. Of course, you have, of course, a market culture to apprehend, etc. But there is no barrier in terms of law. Whereas when you do banking, even within your own country, you have so much regulations around you that moving to another one, to another zone, is quite is not often very straightforward. So internationalization of Swiss fintechs, I would say, would come from the B2B side, but that's my opinion.
Actually, I agree 100% with Arnaud. As we're building a B2C system, it's super tough. Switzerland it's probably the worst place to be, definitely. The best place is to be when you have like a mass market and you can test really easily, which is not the case in Switzerland. We speak 3 languages, there is a high regulation, and actually we are not this tech-savvy nation yet. But for the next blue chip, definitely Arnaud is right, it's going to be a B2B, leveraging the legacy and the beauty of the tech in Switzerland. For example, if we look at maybe, yes, Temenos, it's a super success story. I mean, 26 years old company, a multi-billion company. That's a kind of unicorn we can expect from Switzerland again.
And Pelerin is building Temenos 2.0.
Thank you.
Another question. So cryptocurrency are a lot about keeping the identity secret. The buyer wants to stay anonymous. However, Switzerland signed a few years ago l'échange automatique de renseignements. Sorry, I don't know how we say that in English. Échange automatique de renseignements, which started a few months ago, starting January 2018. So as a crypto bank, what is your point of view about the échange automatique des renseignements?
First of all, we are not a crypto bank. We are a bank on blockchain. Today, just to make a brief parenthesis here, today we've made two cases, two scenarios to FINMA. One is a banking license with crypto and one banking license without crypto. Why? Because FINMA is super scared of a bank offering crypto deposit. Today you have banks offering crypto exposition, right? So you go to Swissquote, you can enter with Swiss franc, buy Bitcoin, which is not Bitcoin that you're buying a certificate on Bitcoin, so you can have exposure to Bitcoin, and when you want to use it, you can't, you have to sell it, then you can get your Swiss franc back, cash it out, and use your money. Now, today, offering a full crypto deposit as a bank involve a lot of issues on the anti-money laundering laws. Simple reason is that today you can make a due diligence on the origin of the fund of someone that is coming through a bank wire from Germany, from France, etc. It's quite easy, and there are good systems to do it. Now, if you look at Bitcoins coming from the blockchain, yeah, they go and they deposit to your bank, how do you actually conduct this due diligence to know where is the money coming from? Has it been somehow in the darknet? Has it been used to sell drugs or even worse? How do you actually do that? And that's actually the main topic that we are addressing with FINMA today. How are we going to conduct this chain analysis on those clients to make sure that we're on top of it? What will be the refusal rate? Because of course, if you look at it and you have your procedures, you would have a high refusal rate because some customers, even if they are super legit, they cannot prove their story, right? So every customer comes with a story, but if they can't prove it, it's quite hard. Some guys are very easy. I participated in the Ethereum ICO. I made tons of money. I never moved the coins. You can see on chain, easy. Now, if you look at someone that is in Bitcoin since 2012, he has probably moved his Bitcoin in every platform. Somehow one of the Bitcoin he has received was from someone that was in the darknet somehow, and it gets mixed in his wallet. And the story becomes way harder to actually prove. And actually, this is the biggest challenge. And I cannot guarantee you that we will offer crypto. In the future, I'm sure we will, but to start, I cannot guarantee that FINMA will authorize that.
Yeah, I have a question to Arnaud. Do you eventually, besides being a bank, do you plan to become as well a red tech, considering that you're using blockchain, and then considering that banks spend more and more money for compliance? And if I understand
it's all about compliance. Banks is all about compliance. Then that's
I know, but
thing.
So do you plan to push to outsource basically or out license your way of doing things with your bots and to be super light compared to old legacies?
Excellent. So there is one specific thing that I didn't speak about, but because we intend to issue the entire balance sheet on chain, right? So liability, deposit of clients, asset, loans, etc. So we make them smart contracts. But now we have, of course, when it's on chain, a transferability issue because if you look at it, you don't want to have one of the assets issued by Pelerin to be owned by Ben Laden, right? And on chain, normally you don't know who has what. It's pseudo-anonymous. Now, on our side, it's not acceptable from FINMA perspective. So what we've built what we call is an abuse of language. It's a compliance oracle that is on top of this. So there is the network layer, Ethereum, and there is the application layer. This is the smart contracts we're building. And those smart contracts today have embedded compliance, meaning that this compliance oracle is a company that we are actually having on the side. It's completely outside of the bank. It has an SLA that will basically support the bank plus the other product that we are running today. And the idea is exactly this, is that this compliance solution, this rule engine that we're building, we believe is super high quality, is way lower to lower cost to operate, and this is actually something that today's banks are coming and asking us, oh, I've seen your KYC solution and the video onboarding, so basically you can just take a snapshot of your passport and everything gets filled automatically. Oh my God, this is amazing, and then you have this 2-minute video chat where you onboard the client. The journey for him is super cool, and he gets to know you as a real person on the other side. We want to have the same thing instead of asking clients to come and sign papers at the office. So again, this is clearly something that we see as a huge opportunity of growth.
Sorry, as a follow-up question, so how difficult would it be to, because as you said, the regulations are very different from countries to countries, or how difficult is it for you guys to map into a specific compliant ecosystem?
For us, we want to comply with FINMA rules.
I know, but let's say that tomorrow you want to go to the US or
yes,
any other.
very good. Yeah, of course. At some point in time, yes. Today, the strategy we have is because we have a high international story to tell with this bank. The way we want to go international very quickly is not by having banks on other monetary zones, but today we are creating a payment service provider, and it's called IBANI, whatever. But this payment service provider that we have here that is live, it's an international, it's a financial intermediary in Geneva, allows us to make deals with PSPs all over the world, and to basically spread this network of PSPs to allow ourselves to do the compensation instead of paying banks to do so. So basically being able to offer IBANs in France, IBANs in Germany, IBANs in all the different countries that would be used through this PSP that we're building, instead of having a bank being regulated on the other side.
And so I suggest that you ask any more questions that you might have during the networking. So thank you very much for your presence, for your answers that were very complete. Thank you to the public as well for the very great amount of questions that we had. And I hope that if you have any questions, you can ask them during the apéro. Thank you.